Hi everyone, welcome back to the USCPA classes for Financial Accounting and Reporting. This is part 8 of ASC 842, that is Lease Accounting. In this video, I'll be walking you through in detail about lease contract component. So let's dive into to understand more in detail about lease contract components.
First, we need to identify separate lease component in a lease agreement. So there might be a possibility that there is a one single lease contract in which you are giving the building on rent, you might be giving office equipment on rent, you might be giving furniture on rent, and you might be providing AMC services, or you might be providing cleaning services or plumbing services, everything in a bundle of a single contract. Right here, as an accountant or as an auditor, it's being our responsibility to identify the component of each lease. So land and building might be a separate component, office equipment might be a separate component, office furniture might be a separate component, right? But in that agreement, there might be a possibility there are some non-lease arrangement. Non-lease arrangement like maintenance of the office, which is like plumbing, firefighting, cleaning, right? Or maybe including security, right? So those are non-lease component. So that also you need to identify. So that those area which is non-lease, that you can consider as per ASC 606, because that comes under the revenue recognition criteria from the lessor standpoint of view. And from the lessee standpoint of view, it comes as an expense, right? Are you guys with me? Hello? Hello? Ayush? Akash?
Yes, sir.
Hanji sir.
Yeah, are you guys with me?
Yes,
Yes, sir.
sir.
We are with you.
Mic on
So
camera.
yeah, so if there may be a possibility, like for example, your company has taken the office space on lease, let's assume from DLF, right? So DLF might be entered into a bundle deal with your office in which they are providing land and building, they might be providing plumbing services, firefighting service, office maintenance service, cleaning services, right? And then some common areas, right? Everything. So in that, how you need to identify the different component which comes under the lease. What all comes under the ASC 8042 criteria? Only the property, plant, and equipment, right? So if they are providing any AMC, if they are providing any plumbing, firefighting, or office maintenance service, that does not come under 842. Are you guys with me?
Yes,
Yes,
sir.
sir.
Hmm? So we need to, in the contract, we need to bifurcate and we need to identify the separate lease component and the non-lease component also. So that we'll do the accounting of the same accordingly. And then after we need to do like classification of similar nature of component into a similar bucket. For example, land and building may go into the one bucket. Office equipment, it may be like computers, it may be printers, or it may be wires, it may be TV, or it may be like some conference equipment, right? But all of them will club together, will generally come under the office equipment category, right? Same way like furniture, it may be table, it may be chair, it may be sofa, it may be racks, it may be almirah, but all of them club together as a furniture. So here you need to identify first what all are lease component and what all are non-lease component. Within those lease component, what all can come under the same category or same classification, which you can club it together. What all are coming in the different classification, you need to segregate it. So that's the first task you need to do. So if you look at like identify separate lease component in a lease arrangement, in this respect, right to use asset is considered to be separate lease component if both of the following criteria are met. So why we are identifying separate lease arrangement or separate lease asset, so that we can give an appropriate value for right to use asset as well as to the lease liability for the respective component and respective category. And accordingly we can amortize also, like if it is an operating lease, then in that case, lessor will still account for those items as their asset. How do they need to depreciate or amortize those assets? So the life of assets is also being based on the category of assets or classification of assets, right? That is the reason it is very important. If you see the first point, leasee can benefit from the use of asset either on its own or together with other resources that are readily available for the leasee. Second thing is, readily available resources are goods or services that are sold or leased separately by the lessor. If these two conditions are met for any particular asset, then that particular asset is being considered as a separately identifiable asset. Same way how we have studied in ASC 606. Right? If you remember, in ASC 606 also, we discussed this concept, separately identifiable item. Here is the separately identifiable asset. But what is separately identifiable asset? Which leasee can take benefit from the use of the assets, either of its own or with any other asset, right? Or it is readily available resources as a goods or services that can be sold or leased separately. So for example, uh, let's assume like printer. So printer and computer, they both can be leased together, but at the same time they can be leased separately. Printer also separately and computer also separately, right? Or they can become as a bundle. But here you need to identify both of them separately. So computer is one asset and the printer is another asset, right? So lease of the household equipment like fridge, washing machine, air condition, they all you can consider as household equipment, right? But at the same time, they all are having different functionality and different usage, which is being independent, which is not dependent on other. Make sense?
Yes, sir.
Santrupti, Avneet, Rajiv, sir, all good?
Yes, yes.
Okay. The underlying asset is not highly dependent or highly interrelated with other underlying asset in the contract. Same definition as we discussed in ASC 606. So note over here is the right to use land is always treated as separate lease component. So this is a thumb rule. Right to use land is always being treated as a separate lease component. So if you are taking land and building, so in that you need to bifurcate land separately and building separately. And this is mandatory requirement, right? Unless the accounting effect of doing so would be insignificant, right? If the impact of not considering this is not material, then it's not very much mandatory to bifurcate. But if the impact is significant or material, then it is mandatory to bifurcate land from the building. Identification or bifurcation of lease component. How do you identify and how do you bifurcate the lease component? So let's understand that through this small pictorial presentation. In a lease agreement, so just keep in mind your office has taken, your company has taken an office on lease from the DLF. In that, DLF has provided, just imagine DLF has provided the bare space, right? They have also provided some equipments. They have also provided some computers. They have also provided some furniture. They also have done certain leasehold improvement so that you can go and plug and play immediately and start your office, right? So in that case of scenario, in addition to that, in that agreement, it is being mandatory that company need to take AMC and office maintenance services from the DLF. So that is mandatory from the DLF standpoint of view. In this whole arrangement, if you see, there are different components: land, building, office equipment, furniture, computers. So these all comes under the 5 category of leases. At the same time, there are certain non-lease items, which is AMC, office maintenance, those kind of services, right? That need to be accounted for as per ASC 606. So if you see here in the lease agreement, first you need to identify the lease component and the non-lease component. Once you identify the lease component and non-lease component, to those lease component, you need to allocate the transaction price. Similar way how we have studied in ASC 606 about allocation of transaction price in step 4, right? Hope you remember that step 4.
Yes,
ASC
sir.
606, right? Allocation of transaction price. What all things we have studied at that point of time? Allocation of standalone selling price is based on their standard price minus if there is any specific discount or allocation of discount, whatever is the remaining balance. On that basis you will be allocating the transaction price. So same formula, same methods will apply for the ASC 842 also. If you are having in our example we have 5 component of these, right? So land is different, building is different, office equipment, furniture and computers. So if those equipments could be provided on a standalone basis to any third party, what would be the lease amount for those individual 5 items? So accordingly, that is your starting point. And if there is specific discount, let's assume for a building, they have given 10% discount on the building rental, right? Then that 10% discount will be adjusted only and only against the building. Normally, let's assume for all the 5 component, monthly rental should be $12,000 and they have given you discounted price of $10,000. So then this $10,000 you need to allocate based on their standalone lease rental. Same way like in ASC 606, which you have studied based on standalone selling price. Make sense? Or you want me to do some math for it?
Understood, sir.
Got it. Okay. And then in the lease book, in addition to this, we'll be doing initial direct cost calculation and we'll do the capitalization of the same. Initial direct cost of leasing. So that is only in the books of lessee. Note over here, lessee is allowed as an accounting policy election by the class of underlying asset to not separate lease component from non-lease component. Instead, a lease would account for lessee and lease will account for lessee would account for lease and non-lease component together as a single component. Here, if the amount is not material, then lessee can consider as a single lease component, but if it is material, then it has to be separately identified. So here materiality concept also you need to apply. Electing this option would result in a greater lease liability and right to use asset than when separating the lease from non-lease component. If non-lease component is also being clubbed together with the lease component, then it's very natural that lease liability and right to use asset amount will inflate. Right? Any doubts so far? What is lease contract component and what is non-lease contracts component?
No, sir. We're good.
Santrupti, Rajiv sir, Avneet. All good?
Yes, sir.
Okay, let's do a practice question. Which of the following statement about non-lease component is not true? The call of the question is not true. First is the lease allocates the consideration to lessee to lease and non-lease component on a relative standalone selling basis. So first point is lessees allocate the consideration to lease and non-lease component on a relative standalone selling basis, standalone price basis. So that is true statement, right? First statement is true.
Yes,
Yes,
sir.
sir.
Second is if the component cost represent a transfer of goods and services to lessee, it is treated as non-lease component. If the component cost represent a transfer of goods, that means if there is any transportation charges, right, then would that be treated as non-lease component or lease component?
Non-lease
Non-lease.
would be recognized
Non-lease
as per ASC
as an
66.
expense. Yeah, that will come as expense for lessee.
Okay.
Third is the leasee include the non-lease component when computing the present value of lease payment. So here, if you see, remember this last point, this note over here. Just read this again for me. Leasee is allowed as an accounting policy election by class of underlying asset to not separate lease component from non-lease component. Instead, the leasee would account for lease and non-lease component together as a single component. So this is being allowed. And what is the point here? The leasee include the non-lease component when computing the present value. Oh, sorry, my bad. So when you go to the present value, when we do the calculation,
तो वैसे भी non-lease components की केस में तो उसको करेंगे ही ना consider
करेंगे
मतलब
नहीं,
present
yes,
value.
yes. So if you see the present value, when we do from the leasee standpoint of view, we do not include non-lease component. Yes. So that's an untrue statement. Last point is, 1 second. Non-lease component are expense by the lessee. So this is true, right?
Yes.
So hence only the third statement is right answer. Everyone agree?
Yes, sir.
Ananya, Pulak, Avneet, Santrupti.
Yes, sir.
Correct? Okay, so next topic is sale and leaseback transaction. Have you heard about this term, sale and leaseback?
Yes, sir.
Do you mind sharing what exactly is your understanding?
So my understanding is some companies, what they do is to increase their working capital.
Yes.
So they basically sell any heavy asset that they might have, which is has a huge value. They would sell it to someone and then take it back on lease, so as to reduce their working capitals, and then and also increase their working capital, and also their depreciation expense would reduce because it would be operating lease, something like that. So that is sale and lease back.
Yeah. Does everyone agree like what Ayush has shared? Pulak, Avneet, Ananya. So sale and leaseback transaction is generally when company have like assets heavy, right? And they are having like short of working capital. Generally what they do, they sell those assets and take those assets back on a lease. So if you see here, the sale of assets from seller. Seller is also here, is the lessee, if you see. And it go to the buyer who become the lessor. And then he provide the asset back to the seller on lease. Are you getting my point? So here, if you see like seller give the asset to the buyer, right? And then buyer become a lessor and give the asset, and give the asset back to the seller, which become a lessee. So this is what like transaction is happening from the seller, who is the original owner of the asset, and become again the lessee who is using the asset. So transaction is majorly entered to provide financing, accounting, and tax benefit, because you can claim more expense, you can claim tax benefits, you can claim financing cost also, right? So that will help in giving more expense, then probably it was be on only just depreciation expense. But more importantly, it give up financing benefits or managing the working capital for the company, right? So recognition of the transfer of assets. When the asset is being transferred under the sale and lease back, look at left hand side, the buyer. Who is buyer? Who is buyer?
Lesser.
Lesser. Buyer is lesser, who is like after purchasing the asset, give the asset on lease. So he's become a lesser, has obtained the control over assets. And if you look at right hand side, when buyer or lesser has not obtained the control. So when you are selling the asset, there may be a situation when the assets is being obtained, the control is being obtained by the buyer or lesser, or there might be a possible situation that you remain control that asset despite of the fact when you have sold it. So for example, if you have sold land and building and you are still occupying that land and building on a lease, so in that case of scenario, so you are still owning that lease and you are continuing working over there, but ownership you have been transferred. So that you need to identify it or understand clearly from the sale and leaseback transaction what is the nature of transaction and what actually is the substance over form happening. So if the buyer or lessor has obtained the control over the asset, for example, you are having a car and you have sold that car to, let's assume Santrupti has a car and Santrupti has sold that car to Ananya for $10,000. But Santrupti is continuously owning that car or continuously driving that car and taken the car on lease back from Ananya for, let's assume, $500 a month. Right? In that case, in the eye of public or the nomenclature, it looks like she still owns it. Whereas she has given the assets to the Ananya and she has taken money from Ananya and now she's paying $500 a monthly rental to Ananya. Or the other side, the buyer or lessor has not obtained the control, right? Sorry, this side we have discussed. Right hand side where Ananya has taken over the charge for that car. So how to deal with it? If you look at left hand side, when ownership is being transferred or you can say control has been taken over by the buyer. In that case of scenario, seller or maybe lessee account for the transfer as a sale at point in time when the buyer or lessor obtain the control. So at the time when Ananya has taken the control over the Santrupti car, Santrupti will book that as a sale and leasee account for as operating lease. Now the assets for few months she has taken on lease back. So for that it will be an operating lease. Whereas on the other side, Santrupti has said to Ananya, you can give me $10,000 and you can own the car. I'll transfer all the titles and paper on your name, but I'll take that on lease back to that car and I'll be permanently using it and I'll be giving you $500 a month as a lease rental. So here the control over the asset has not been transferred. Only the title has been passed, money has been exchanged. But Santrupti is still holding that car and still using the car and public at large know that it's a Santrupti's car. In that case of scenario, it will not consider as a sale. We need to assess whether this transaction is a finance type lease or the sales type lease from the seller point of view. And seller or lessee not de-recognize or transfer the assets. So that asset which is in the books of the seller, he or she should not de-recognize if that is the situation, that control is not transferred. And then third is seller or lessee should obtain for the amount received as financial liability. So it will come into your liability side. And buyer who is paying the money would account for as a receivable in their. So two things. One is when you have sold the asset and the other person has taken the charge of the asset, right? In that case of scenario, it will be considered as a sale. And when you consider it a sale, the person who is purchasing it, person who is selling it, they'll book the profit at the time of sale. And then when that person is taking that asset back on a lease, so here we need to assess whether that lease is an operating lease, finance lease, right? So most of the time it is operating lease, because if the buyer is not giving the control over the asset, that means it is for the temporary period. So if it is for a temporary period or month on month or day on day, so then it will be considered as an operating lease. On the right hand side, if you see, when buyer has not obtained the control at all, that means car is still with Santropti. Ananya has just paid the money and took the title. Whereas public at large, everyone knows it's a Santropti's car and she is enjoying all the benefit of that car. In that case of scenario, it is not a lease, it is just a financing arrangement. If it is a financing arrangement, the person who is receiving the finance, it is finance liability for them, and the person who is paying the cash has the finance receivable. Very simple. That's how you need to account for. Make sense? Yes? No?
Yes, sir.
Okay, so look at the note below. A repurchase option for a seller or lessee exercisable only at the end of at then prevailing fair market value would not be precluded from the sales statement, provided that underlying asset is a non-specialized and readily available in the market space. So if you remember the conditions, if you are building an asset specialized nature for a specific company usage, in that case of scenario, it is always be a finance lease, right? Or if it is not a specialized nature and it is being readily available in the market, and you can do the repurchase option at the fair market value, then you can consider that as a you can say non-finance arrangement, or sorry, not a finance lease or not a sales type lease. The repurchase option must be substantive in order to affect the accounting for transaction. So that is also very important. The repurchase option must be substantive. That means should have a material value. Then only you consider that lease as a finance lease, or in case of seller side, sales type lease or finance lease. Right? This is very similar to understanding what we have studied in the earlier classes also. Right? Any doubt on what is sale and leaseback transaction?
Not now, sir. But इसका वो ये practical questions होंगे ना, तो थोड़ा better.
Yes, yes. I think we have we have practice question. But yeah, before completing this or jumping onto the practice question, let's finish off measurement. So measurement of sales and leaseback transaction. How do you measure, how do you value the transaction which is considered as a sales and leaseback transaction? Fair value on the basis of difference between either of the following, whichever is more clearly available or determined. So first one is sales price of the asset and fair value of the assets. First is sales price or the fair value of the asset which is more clearly available. Second is present value of the lease payment, present value of the all future lease payment basically, and present value of the market rental payment, whichever is more clearly available, right? So you can consider that as a measurement of the sale and leaseback transaction. That means that as a value of sale and leaseback transaction. Anything out of these four which is being more clearly available to you, you can consider that as a base for the sale and leaseback transaction. If the transaction is with the related party, then appropriate disclosures are being required as per ASC 850 related party disclosure. Let's do two practice questions. Which statement related to sales and leaseback transaction is incorrect? The call of the question is incorrect statement. First is sale and leaseback transaction generally involve fixed assets such as real estate. So is it true or false?
True.
True, right? The ASC 842 is primarily for property, plant and equipment, including real estate assets. Second is sale and leaseback transaction occur when a transferor sell an asset to a transferee and then transferee lease that same asset back. Sale and leaseback transaction occur when transferor sell. That means seller sell an asset to the transferee. And then transferee lease the same asset back. Oh, we need to look at it.
तो सर ट्रू ही है मेरे ख्याल से स्टेटमेंट.
One second. I think. Let's understand here. Or maybe just park the second point. Look at third point. If the transaction is not at fair value, the entity should adjust the selling price of assets to fair value. Fourth is sale and leaseback transaction may provide finance, accounting, and tax benefit. So statement 3, 4 looks okay. Now coming to the statement 2 analysis. Let's do an analysis of this statement. So what they are saying, sale and leaseback transaction occur when transferor. Who is transferor?
Is the seller.
So sale and leaseback transaction occur when transferor sell an asset. So this is transferor. Transferor sell an asset to the transferee. And then transferee lease back the same, that same asset back. Buyer or lessor has not obtained the control. Buyer or lessor has obtained the control. So seller or lessee account for the transfer as sale at point in time when the buyer obtained the control. So here the asset is being transferred. Here the asset has been transferred. Are you getting the point?
Sir, control wala angle hai kya?
Control.
Yes. So it looks like this one. So recognition of transfer of asset, basically this is the point. So when buyer or lessor has obtained the control, in case of transfer of asset, obtainment of control, I can slightly increase the size of it.
बट इससे सर पता तो लग नहीं रहा कहीं से भी कि कंट्रोल नहीं है. मतलब इससे मतलब स्टेटमेंट पढ़ के बिल्कुल भी आइडिया नहीं लग रहा कि कंट्रोल नहीं है वो कंट्रोल.
One second. Yeah, sale and leaseback transaction occur when transferor. When it comes to transferor, that means actual position is moving from seller to buyer.
Okay.
So that you need to keep in mind. I know like this is also first time I'm looking at this question, but yeah, transferor here is mean like actual position, actual asset is being transferring from one person to another person.
So that is तो नहीं है कि क्वेश्चन में लैंग्वेज ट्रांसफरर यूज करिए, सेलर और बायर नहीं यूज करी. कि सिर्फ
हाँ,
asset transfer
ट्रांसफर हुआ
हुआ
है,
है।
वही है क्या इसका
yes,
मतलब?
yes, yes, yes. Transfer here means is transferring of assets,
Okay.
right? So in that case of scenario, it will be considered as a sale at the point in time when the asset is transferred. And then from the lease standpoint of view, it will be an operating lease,
Okay.
right? Pulak, Avneet, Santrupti, Prashant. Got
Okay,
it?
sir. Yeah, got it.
Yes, sir. What?
I know it was different question than what we have expected. Okay, so next question. Which statement related to sales and leaseback transaction in which transfer is not treated as sale? In which transfer is not treated as sale is correct. The buyer should account for any amount paid as a financial liability. Which of the following statement related to sales and leaseback transaction in which transfer, so again the point here is transfer is not treated as sale. So when transfer is not treated as sale, in the right hand side option, buyer and lessor has not obtained the control, right? So it is not a sale, but assess whether it's finance or sales type, and then de-recognize, and then the main thing is seller and lessee should account for the amount received as finance liability, and the buyer or lessor should account for as a paid as a receivable. So this accounting treatment is different. So the buyer should account for any amount paid as financial liability. Is this correct or incorrect?
Sir, this is correct.
Second is the buyer should recognize transferred asset. Yes, now the asset is coming to him.
No.
No, the buyer should recognize the transfer asset. So which of the statement related to sale and leaseback transaction in which transfer is not treated as sale? Transfer is not treated as sale. So this is something.
जब ये सेल ही नहीं हुई तो बायर रिकॉग्नाइज कैसे करेगा एसेट?
Let's keep this second point on hold. Third is seller should de-recognize the assets. Does seller need to de-recognize the asset? The answer is yes. Answer is yes.
यही तो है
हाँ,
इसमें
seller
second
should
वाला
not
हो गया ना,
de-recognize the
not
asset.
de-recognize
हाँ, right.
the transferred asset. क्योंकि इसमें control transfer नहीं
Control
होता.
transfer नहीं हुआ, yes. Third is seller should account for any amount received as financial liability. So seller should recognize the any amount received as a financial liability. Seller should account for
Correct.
amount received as financial liability. So this is correct.
सर वो भी second point ही है, मतलब वो सही है, वो हमने understanding गलत हो गई थी उसमें, क्योंकि इसमें the buyer should recognize the
recognize should not recognize आना चाहिए.
Yes sir.
Right. So these three statements are incorrect. Only this statement is correct. Got it, everyone?
Yes sir.
Pulak, Avneet, Santrupti.
सर वहाँ पे वो change कर दो सर notes, फिर update हो
कहाँ पे?
जाएगा. Should not वहाँ पे not recognize. अच्छा ठीक है, इसमें तो change नहीं है. Okay okay, हाँ ठीक है done. Okay.
Not is right.
Right.
वहाँ पे should है इसलिए wrong.
Should है इसलिए गलत है. Okay. Correct.
Everyone comfortable?
Yes, sir.
Okay.